In our last video, we discussed about the standard deduction and tax credits in the context of US taxation. Today, we are going to discuss about the sales tax and US tax. Many people think that both are the same, and many people think that they are totally different. So today we're going to dive into this topic. So before we move to the topic, I would request all of you to do subscribe my channel and press the bell icon so that you're gonna don't miss any update related to US taxation. So when we talk about the sales tax, so sales tax is a tax that is collected by the seller when you buy something or when you purchase something. So let's say uh, you are living in a California. So California has a state sales tax rate is 7%. So if you go on a shop and buy something, so what the seller will do is, let's say the price of the item is $100 price, and he will charge the tax of 7%, so that the total amount will be 107. So what the seller will do is he will give you the invoice with $107, and the $7 will be the tax that you will give to the seller, and then the seller will pay to the department. Seems very easy and very simple in terms of understanding this. But what is the US tax? Use tax. So US use tax is a tax that when you buy something from out of state or something from online store which doesn't charge you the sales tax. Let's say you are living in a California and you have buy something from the Alaska state. Now Alaska is a state where there is no state sales tax. They have the taxes of the counties. There are some counties where they are charging the tax, but there is no state sales tax. So you buy something from Alaska, and because since there is no state sales tax, so they are not going to charge you any tax. So what will happen is that, let's say the amount is $100 here, and because so you will get the invoice of $100. Now you are living in a California state. You are using that item, you are consuming that item in the California state. So what you need to do is now that you need to apply the 7% tax here, and you need to give $7 to the state directly, to the state, to the government. So in this scenario, what was happening is that the seller has the responsibility of paying to the government. But here in this scenario, is in use tax, the purchaser, the person who is consuming, has the responsibility of paying it directly to the government. Why he is paying that tax? Because he's using that item in a state where there is a sales tax. So to keep it simple, sales tax is an indirect tax that the seller will collect from the purchaser, from the buyer at the point of sale. But use tax is a tax, normally we called it as a self-assessment tax, that the seller will not collect at the point of sale, because either the seller doesn't have the legal obligation because he is operating in a state where there is no sales tax, like I have given example of Alaska state, but because you are living in a state where there is a sales tax, let's say New York. Now New York has a tax of 8%. So what you need to do is, because you are consuming the item in that state, you need to go to the government and pay that tax directly to the government. Hope you like this video. This video is informative for you. If you have any questions related to this, do mention those in a comment box and let me know your suggestions, your advice on this. Thank you very much.